Howard Marks, is there a single most important thing? Because there's a lot of important things in your book, the most important thing illuminated.
Well, the most important thing, lots of people will tell you how easy it is to invest and how you should go about it. What I'd like you to know is that it's not easy, that the future is unknowable, it throws you a lot of curveballs. You can't know which event will occur. There'll be a distribution of possibilities, and you have to allow for many of them, not just one.
Well, in the book, you talk about second level thinking. What is it and how does it apply to investing?
It follows from my first answer. Simplistic, it can't be. Most people are simplistic. Most people say, oh, if you like the company, buy the stock. Everybody thinks that way. That opinion is embodied in the stock price. You have to think better and at a higher level.
Is the stock market efficient in your view? And if not, how do you find those inefficiencies?
The stock market is not efficient, mainly because people are not efficient. They're not rational, they're not objective, they're not constant. They fluctuate all the time. And the key is to not fluctuate with them, to see when they're overrating things and underrating things, and to try to move in the opposite direction.
Why is value, as you write in the book, a more important thing than growth?
Value is here and now. Growth is potential in the future. If you could quantify and predict growth, you could make a lot of money, but you can't do it that consistently. It's much less likely to be a mistake if you quantify value in the here and now.
What's the best way to find value?
The best way to find value is to understand the assets of the company, understand its ability to produce cash flow, and have a handle on how much cash flow it's going to throw off this year and next.
You also talk a lot in the book about understanding and controlling risk. Now, it seems awful hard, especially in a volatile market with so much happening in the world, whether it be China or Greece. How do you do it?
The best way to control risk is to ascertain value and buy for less. You can't possibly do the right thing if you don't have a firm handle on what the value is. Somebody says, buy this stock. Somebody says it has a great new product. Somebody says it's going up tomorrow. Those are not reasons to buy a stock. If you understand the value and can hold firm even when the price fluctuates, that's the best way to control risk.
Now, you deal a lot in fixed income. Is it easier to find value in fixed income or stocks? What's the best asset class for finding value?
It changes from time to time. Asset classes don't have attributes. They only have attributes that people give them. So when people are crazy about an asset class, if you jump in, it's easy to lose money. If people are irrationally allergic to an asset class and you jump in, it's relatively easy to make money. Again, understanding the relationship between the price of a security and the underlying value.
Well, let's stay on the theme of irrationality because it's one of the important things in your book. How do you avoid getting sucked into bubbles? More importantly, how can you profit from bubbles?
Well, it all goes back to being more objective, more rational, more consistent, less volatile in your psychology than others. I mean, people are supposed to be constant and rational, objective, and they're supposed to be hang around at what my mother used to call the happy medium. But instead, they fluctuate madly between optimistic and pessimistic, between being greedy and fearful. And I think the most important single thing is to not fluctuate with them.
This market has
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to